Kia ora, good morning. Let's get started because we are live streaming, so we have people online watching, so we're going to be prompt. Welcome everybody to the second of the Staff Housing Information Series. Good to see you all here. We've got a couple of great speakers today, so we're going to kick off with Jason from Five Peaks Chartered Accounting, who's going to talk about and if you are housing employees. And then following that, we have Sylvie from Myhr, who is going to talk about all of the implications on employment contracts if you are housing staff. So what we'll do today is different to our first session. We will have questions for each speaker immediately following the speaker, because that way we can keep it quite topical and we'll keep things moving along. Also just want to say thank you to Toka for their sponsorship of this series, which has enabled us to live stream, to make sure we get the information out to as many people as possible and to make it free for our members. So thank you for coming. Enjoy. And Jason, welcome up. Be careful of that.
I've learned a lot about accounting around accommodation, employees and rental properties. So today I was going to cover off just one quick thing. This is basically, it's general advice, and if you're going to be relying on this, you need to sort of get professional advice from an accountant or a lawyer, or maybe a mortgage broker or a banker if you're borrowing money. So the options around employee accommodation, we're going to cover off that. An example of a rental property, the impact of the interest deductibility on rentals, shared ownership and taxing on employees. The way I look at, when I was first asked to do this, is talking about how employers can help employees get into housing, and the way I looked at it is employers could help staff by signing up a property, just going out into the rental market, getting a property, signing up, and then subletting it to their staff. There's a lot of employers doing that at the moment. And then the other way is obviously using your own personal connections with people you know around town to help staff get accommodation. The third one there is to buy a residential rental property and then lease to your staff. And the other option is to help employees into either build a home or into a shared ownership or something along those lines. So what I'm going to cover off now is an example rental property. So what I've done is I've chosen a property on Trade Me. It says, okay, 4-bedroom house in Fern Hill, what's that going to cost you? Roughly, that would be around about 960,000 is what they're advertising it for. Maybe it's a bit less than that, but roughly. And the next slide's going to show 3 scenarios. One's with interest deductions, which is pre any changes to interest rules. One with no interest deduction, which is what we'll be heading to in a couple of years' time with existing ones, or a new rental property there's no interest at the moment. And then what the rents would need to change to keep the landlord in the same place that they were before the interest deductibility changes. So it's kind of 3 options. And so for a start, what I've said is make an assumption there's $1,000 a week in rent, nice and simple number, which means that on the 100% deduction there'd be 50. Is that working? Is that better? So basically we've assumed $1,000 of rental income, and that's interest at 6.5% would be around about 38,000 of interest, and tax on that would be 1,300. And if you're paying the loan off over 30 years, you pay another 6,300. So overall, the landlord will be putting in 3,600, of which 6,000 is kind of going off the loan. So it's around about a $3,000 gain that they would have overall. Then if we move to no interest deduction, that changes the tax from $1,300 a year to $14,000 almost, which means that the landlord then has to stump up $16,000 versus the $4,000. And then if the landlord said, okay, I'm going to charge exactly whatever the cost is and keep me at the same point at the end, they'd have to charge $1,300 a week in rent rather than $1,000 to keep them in the same place. So I guess the point I'm trying to make is that the interest deductibility has a big impact on the landlord's costs, and that 100% for a lot of rentals, the existing ones, that won't happen for a couple of years. But at the moment, we're sitting at 25% interest that you can't claim, so we're sort of halfway between those two, or a quarter of the way. So the interest deductibility rules, what they're changing for, so an older property which has been brought after March 2021, before, you can claim, there's 25% of the interest you can't claim up to October, from October 2021. And then from 1 April just gone, you can't claim 50% of the interest, and then it's 75 and 100%. And any new rental properties being purchased, there's no interest deduction at all. So interest deductibility's got a big play in terms of the rental market, I think. New rental properties that are built with a code of compliance after March 2021, you can claim 100% of the interest for up to 20 years. So a brand new property is fine to be rented out. And I just wanted to point out there that the deposits on a new build is usually about 20% compared to 40% with existing. There's an exemption too for employee accommodation. So if you're an employer and you rent accommodation to staff, and as long as both the employer and the rental, the ownership of the rental is the same, then you can claim 100% of the interest as well. So employers have a slight advantage over other investors for older properties, but you have to have the same owners of both. So either the business has to own the rental property, and then you could claim the interest. There's some other interest deductions, exemptions on the deductions of interest, but they relate to, like, you know, motels or things like that. So another option. So there's quite a few builds happening in Hanley Farms at the moment, which are 3-bedroom and 2-bedroom, roughly, you know, give or take. They cost around about $1 million. If they're split up, then, you know, that could be a $600,000 or a $400,000 house. That might be an easier way of helping staff into accommodation of some sort. But obviously you have to go through that whole buying the house, buying the section, building it. It's a couple of years away. And the other option is you could say, well, I'm going to give my give accommodation free to employees. And what I was doing, sort of trying to show in this example, was if for instance you gave a $200 discount to your employees on the rent that they pay, the idea is that, well, that basically needs to be taxed with their wages, so it doesn't really make any difference. It's over investors, as they can claim all the interest. Longer term rental agreements might need to be in place to give you some security for your staff with accommodation. Newer properties will have a higher cost, and then that's obviously going to equate to higher rents. And roughly speaking, the rents will need to increase by 30% to keep the landlords in the same position. And less landlords will increase the rental prices. And I think it was the Benji Patterson was saying that the rental properties had decreased by 30% in the last year, I think it was, which, if that carries on, the position becomes a lot worse, especially if the rents go up by 30% as well. So I guess that's the end of my speak. Has anyone got any questions? Yes, Kathy.
Just going back to the staff, you mentioned it has to be in the same entity.
That's right.
Oh, sorry. Can you just confirm that an OpCo-PropCo situation wouldn't work in that instance, and it has to be definitely both in the same entity?
They have to be, it's called a wholly owned, they need to be wholly owned. So if the business that was employing people had, say, a family trust that owned the shares, then the family trust would have to own the shares of the company or the business that's renting this accommodation. Or if it's one person that owns the shares in the company, that same person has to own the shares in the rental company.
Okay.
It's got to be exactly the same ownership.
Perfect, thanks.
Sorry, just to clarify, can that be two separate companies but with the same ownership?
That's correct.
Thank you, Jason. No, stay there. There might be some more questions. You're not off the hook yet. Yeah, I thought that was really interesting, just showing, you know, the reasons for the rent increases that we're seeing as well.
The other reason too is that a lot of landlords, when COVID came along, interest rates pre-COVID were about 5 or 6%, give or take, happy to say, let's knock 30% off the rent while COVID's going on, you know, kind of doing the right thing. And I guess now those rents are going back up to where they used to be. Interest rates have gone back up, so the rents need to go back up as well.
Yep. Differences between corporate leases and retail leases?
So this is talking about residential. This is residential. So you mean a commercial?
So like a company coming in, putting a 6-year lease on a house to house staff to, you know, for, you know, then just it gives them a continuous supply of accommodation for, you know, management staff, whatever. Does the same rule still apply to corporate over residential?
With the same, so if it's residential leasing, then the same rules apply. Okay. Same with Airbnb as well. Okay. The same interest deductibility rules apply there as well. Yep.
Any more questions? And if anyone's watching online as well, you can actually enter questions as well, and we will find them and ask them. I'll be happy to.
How does the IRD establish what the market rent is out there for providing staff accommodation for that FBT?
Well, I
rating?
think with the market rate, I think you'd use, I mean, there's the bond data, so you can go into tenancies and you can see what the low quartile, the upper quartile, and the mid ranges, and I'm guessing it's somewhere in that range. You could go to a property manager and say, what do you think this place is worth? And they'll give you a range, and I guess as long as it's in that range, that's fine. If it's a lot lower than that, then I guess it looks a bit strange. Like if you're renting to someone for $100 a week, that just doesn't make sense, you know. Yeah.
Good question.
Down the back there.
Hi. When you mentioned the exemption for employer accommodations,
Yes.
and said that different rules apply for motels, could you explain
Yeah,
that?
so basically a motel, all the interest is deductible. So if you're running a property which is a commercial property, or like for instance this place, the interest would be deductible on it. If you're running a Airbnb out of a residential house, then the residential interest deduction rules apply, so you don't get any claim on interest if you bought the house now. So Airbnbs are in the same camp as residential rental properties, which I think perhaps the Airbnb market isn't quite twigged to yet, or maybe, there's a lot of people buying Airbnbs at the moment, but I think when they start factoring in the fact that actually they're going to have to pay a huge amount of tax, that it may not be quite as attractive as I think it was.
Any further questions?
Okay.
Jason, are you seeing sort of stronger demand from employers coming to you with all of these questions? What are you seeing?
I guess, I mean, it used to be there was quite a lot of residential, I would be seeing a lot of new residential property people coming through.
Mm-hmm.
There's nothing coming through now, and even when they do come through, you've got to kind of say, do you understand the interest deductions? Do you understand how this is going to work? And also, if you sell the house within 10 years, then you have to pay any tax on the gains as well. So it's not a great market, not as good a market to be in as what it was in the past. Yeah. So, employers are definitely struggling. I've got lots of clients that are struggling to find accommodations. Some have brought properties, some are using temporary accommodation type things, which it's not great, it's not perfect, but they can't get the staff either, so they're struggling on both sides.
But this could all change come October, right? So
Well, if the rules change, and National has been saying that they will remove the interest deductibility thing and put it back to normal, and if that happens, then I think a lot more residential rentals will come onto the market. I think
Yes.
Queenstown is pretty attractive in terms of the capital gain side. It's probably higher than most places in New Zealand, but then it's got a very high price at the moment. The average price in Queenstown is about 1.6 versus Auckland's about 1 million. So, and the rents here are probably they're not 60% higher than Auckland, I wouldn't have thought. So.
Okay. No more questions? Thank you, Jason. Appreciate that. Thanks for coming in. Sylvie, welcome up. And maybe go around this way, because I'm very paranoid about that.
For those who can't see, there's a trip hazard here that she's just taking care of. Kia ora koutou, my name is Sylvie. I've been in town for about 14 hours now, so I am based up in Tamaki Makaurau in Auckland, and so I'm delighted to have a reason to come down to Queenstown, to your beautiful part of the world. Jumping into employment and tenancy. The context for this conversation really is that when you are an employer and you also have a tenancy relationship with your staff, what does that mean? What does the documentation have to look like? How do we manage those two separate relationships? So starting with the basics, can I provide accommodation to my employees? Hopefully we all know that the answer is absolutely yes, that you can. What you will need to do is to make sure that you have an employment agreement in writing with your staff. That rule is for everyone who you also are not providing accommodation to, but there are up to $10,000 penalties if you don't have written employment agreement in place with your staff. So make sure that your documentation is sorted and tidied away. You will also need to have a tenancy agreement in writing. Technically, this can be a part of the employment agreement with your staff, but the recommendations from Tenancy Services and from the IRD is to have it separable, so you may as well just have it separate. There isn't really any benefit to having it as part of the same PDF, just have two different PDFs there. Of course, make sure your accommodation meets the required tenancy standards. As we'll talk about in a second, it's because you're governing two separate relationships, and there are separate legislative requirements and separate requirements for each of those areas. So make sure that on both fronts you're meeting your obligations to your team. Flagging a couple of things to be aware of. The first is watch out for providing notice to your employees who you also have a tenancy relationship with. Later in the piece we'll talk about the specifics there, but be aware that if you have an employee who is a tenant, they have particular protections under tenancy law because of the fact that they are also an employee of yours. And details to come, but foreshadowing that there are some details there that we will all want to be aware of. The second is that when you are at the beginning of your relationship with this person, or if they're already an employee and you're talking around accommodation, make sure that you don't exert undue influence over an employee's decision to take up employer-supplied accommodation. What undue influence looks like very much varies depending on the facts of the situation, but telling them that they can only have the job if they take up the accommodation you're supplying is an absolute no-go. That's illegal. There are some quite heavy legal penalties there. But making it clear to them that they have choices, or they have to be aware that you can't exert undue influence. So be aware of that dynamic. So congratulations, you now have an employee and a tenant. You have two relationships with this person. So as an employer, you are governed by legislation like the Employment Relations Act, the Health and Safety at Work Act, all of the kind of parameters setting and guide rail setting that applies to them as an employee don't magically disappear because they are now also a tenant. I don't think reasonably anyone would expect that to be the case, but just being really black and white about that. And you now also have a relationship with them as a landlord. So the Residential Tenancies Act, the Healthy Homes Guarantee Act, the requirements around the types of facilities that your accommodation may have, the terms and conditions of that tenancy relationship, all of those also apply because you have a Venn diagram of relationships as an employer and as a landlord, and you must be meeting your your obligations in both of those different jurisdictions. So a referee here tells us to pause and pay attention to the type of tenancy relationship you have with them. Where you are an employer providing accommodation for a workers to you, and you are providing them with accommodation because of the nature of your relationship with them as an employee. So a service tenancy has a couple of criteria that are not like other tenancy relationships. And again, just a reminder here to have your tenancy agreement and your employment agreement separate. They are two separate relationships, and you can and can't do things differently depending on which sphere we're operating in. So the kind of key difference is that if you are in a service tenancy with one of your employees, rent can be deducted from the tenant's wages, right? Because you are the sole originator of both of these relationships, you can deduct rent. Other landlords can't because they do not have an employment relationship with their tenants, and that would be inappropriate for a whole bunch of different employment agreement. And make sure that you are including the value of what that rent is. If you don't include the value of what the rent is in someone's employment relationship, sometimes this comes through if you've got a template or a document that you're using that hasn't been reviewed in a while. There are limitations to the value that you can deduct, which is 15% of the person's pay if it's for board, so accommodation and food and other services. If it's just accommodation, it's 5%. So if someone is earning $1,000 a week and they don't have a value for rent that can be deducted, the most you can deduct is $50. You can still agree that they will pay you rent later, so I'm not saying you're going to lose out on $950 a week if it's $1,000 a week accommodation, but make sure that if you are talking about deducting rent, be really specific around the value, otherwise there are some other criteria that come into play. The more alarming piece, or alarming when I talk about this topic with audiences, is that as a landlord you can only give notice to end a service tenancy if the employee's employment is also ending. or is also coming to an end, right? There are other ways you can exit that tenancy relationship. It's not because you have something else that you want to do with that accommodation or something else that you're managing. You can only do that if their employment also comes to an end, and ending employment quite hard. If any of you have ever tried to do it, it can be quite a process depending on the circumstances. We'll go into this a bit later, but just a heads up that if you have a service tenancy, your options around ending that tenancy are going to be restricted. So what arrangements don't count as service tenancies? The main one is if the provided accommodation is not their permanent address. So in situations where you have people doing work on the oil and gas platforms and they're there for 2 weeks and then come home for a week, or they're there for 5 days a week and not 7, where you're doing construction or remote projects, again, maybe that's a 5-day-a-week kind of experience. If you have live-in carers who return home on the weekend, if it's not their permanent address, it's not a service tenancy. So you are an employer who is paying for Sylvie to have a hotel for a night in Queenstown while she goes down and does a conversation. It's not my permanent accommodation, so it's not that my boss is not my tenant in this circumstance. People who are living sometimes in accommodation provide and sometimes not, if it feels like it's their permanent home because they're putting up posters of BTS around the place or any of that kind of noise, do get some advice from an employment specialist or a lawyer just to make sure you're not accidentally falling foul of any tenancy laws. This is something quite important in my part of the world. So caravans and tents don't count as accommodation. If you're entering into a service tenancy and you're providing accommodation for your staff, the accommodation should be soundly built from weatherproof materials. And no one in here looks like a monster, so I think that you would all not be doing this anyway. But be aware that if you are providing accommodation, you need to make sure that it meets the standards for accommodation you would otherwise be supplying. And just to keep an eye on the quality of what it is that you're providing. And talk to Jason. Providing accommodation in connection with work makes the value of that accommodation taxable. There are a few scenarios where that doesn't apply, and Jason will know far more about this than I will, and please correct me if I'm wrong, but where it's fly in, fly out, if it's in response to the COVID-19 pandemic, I think there's 3 or 4 others, sometimes supplying accommodation won't attract these kind of tax penalties, but do seek professional advice. I've put here talk to the IRD, but go and talk to Jason instead. He's your contact. So if you have an employee and a service tenancy, what paperwork do you need? You do need a written employment agreement. Again, that's for every one of your employees. You need to have it in writing. That employment agreement has to contain several compulsory clauses by law, and they're not always what you might think they are. So you need to have a description of the work to be performed, the pay rate. You need to say that you'll pay them time and a half if they work on a public holiday, some kind of slightly archaic references in there, but there are some compulsory clauses that you need to include. We would always, of course, recommending including clauses that are relevant to your business or to your industry. And if you would like to have a conversation about what those are, you're very welcome to come and talk to myself or Sam, who's in a rather snazzy blue jacket at the back of the room at the end of the session this morning. You also need a tenancy agreement. So like you need documentation for your employment relationship, you need documentation for your landlord relationship with them as well. Tenancy Services does provide a template, but again, if you have a lawyer, a consultant or an accountant who you use, you'll want to get this checked over just to make sure it captures everything that it needs to and doesn't kind of set you astray. The challenging aspect of being a landlord as an employer is sometimes your employees really piss you off and sometimes your tenants really piss you off, right? And managing the overlap of those relationships can be confusing and can be a bit hard to navigate. So I want to be really clear around what tools you could be looking for to manage any concerns and making sure you don't muddy the waters of those two relationships and therefore cause trouble in one sphere where you're trying to manage a problem in another. So issues or concerns with an employee's performance or behaviour at work, I can guarantee half of us are thinking of the one person right now that we would really like to be having a conversation with, but you want to talk to them about it, whatever it is to start off with, right? You can have a frank and honest, eventually go into the tenancy tribunal if you have to pursue it that far. But make sure you're dealing with the issues in separate contexts so that you're not treading on the toes of your legal obligations and other ones. As promised, ending the tenancy. So a service tenancy normally ends when employment ends. It would be impractical and very expensive to have employees living in accommodation that you could be using for other staff or for other reasons when they no longer work for you. So the notice period here is different to other tenancies. It's 14 days resigned, and you know that they've given you 2 weeks or 4 weeks or 6 weeks notice. It could be ending because they're on a fixed term employment agreement with an end date that you know is coming up, or if you've taken them through a performance management process or a restructure, or if they've just abandoned employment, that happens sometimes, that 14 days notice period applies. The circumstances where it doesn't is where you have reason to believe that they will substantially damage the premises if they stay for the full 14 days. That information, to my understanding, can come from their behaviour as an employee. If they've left under violent, destructive circumstances and they are also a tenant, you could use that to argue you've got good reason to believe that there's risk to your property. If they have been behaving really poorly as a tenant, you can use that to inform that decision. But you need to have kind of reasonable grounds to believe there might be risk to their accommodation if they stay for the full 14 days. Alternatively, if you need to have an employee in place to replace them in less than 14 days and there is no other accommodation available, so no motels, no friends of the family, no other alternatives, then you can provide your exiting employee from the property less than 14 days notice. But again, make sure that you've cased all the options and don't have anything else, or don't have anywhere else that they could go. So you can only give notice if the employment or engagement is coming to an end. We'll talk a little bit more about ending this relationship differently in the next couple of slides, but just a heads up that you need to be aware you won't have the same levers to pull if you want to exit someone when they're an employee as compared to just a regular tenant. So what happens when employment doesn't end? So maybe you have someone who's been working with you who has been living in accommodation you've provided, and they will continue to work for you, but circumstances have changed. So they can give 28 days notice that they want to move out. They can just say, hey, I've bought a house, which is fantastic news. I've found a different set of accommodation. I'm moving in with a friend who's bought a house. Whatever the deal is, 28 days notice is the time frame there. When employment doesn't end, but you want to end the tenancy for whatever the other reasons are, you have the other mechanisms normally available to landlords. So if they are repeatedly breaching the tenancy agreement, if they're causing issues, you can pursue that through the usual channels. I'm not a tenancy professional, so I'm not going to give fun examples because I don't want to get it wrong, but do be aware it's not your only option is to fire them to get them out of your accommodation, but it will be a more complicated process than if they were a regular tenant without being an employee as well. Cool. Any questions from online or from in the room? I think the microphones are going to come around as well.
Just in terms of when an employer gives notice for an employer accommodation, does their last working day is?
It would be 14 days from the employer giving them notice. So if you had an employee with 4 weeks notice and they resigned on day one, as an employer, I don't think you'd be able to give them notice on day one to be out in the middle of that 2 week period. That feels like a bit of, not that you would do this, maybe feels like a bit of a dick move depending on the circumstances. But certainly midway through that you would say, okay, well, your 14 days is kicking in. Yeah.
If we have employees on fixed term contracts, so we know the end date straight away, do we still need to give them that 14 days notice, even though they kind of know that from the start?
Yeah. And the reason for that is because they're separate relationships again.
Okay.
So knowing that your employment is going to end on a certain day doesn't automatically translate into knowing that your accommodation is going to end. It's a common sense.
Sorry, there's another question. And so if we have got 14 days notice, and you say it's quite difficult to get out of that because it's an employee-employer relationship. What if the owner of the house, who the employer is renting it off of, has given us notice, so therefore we won't have the property anymore? How do we then get out of our tenancy agreement with our employees? Obviously, we'd give them as much warning as possible, we'd let them know, but where do we stand legally in that respect? Because, for example, we are renting a property for our staff.
Yeah.
So we don't have full control over how long we have it for.
Because you don't own the,
Yeah, but we...
okay. Yeah. That's a very valid concern, though. I'm sorry I can't help right now.
Yeah, just it's not a specific service tenancy form, is there? It's just a normal tenancy agreement.
It is a different document. So it's called a service tenancy. There are a couple of different questions that they ask you.
Right.
I would need to go through and double check the templates that tenancy services provide, but I'm reasonably sure it's a different agreement.
There's one on their website somewhere.
There is one on their website, yeah, there is. Yeah.
So if an organisation was to provide housing but also offer an in-house recruitment service, say, where there are casual employment contracts between the organisation and other businesses, say, so you bring a guest in, they sign up to the recruitment service, so those contracts are between the trust and the business, can they sign into a service tenancy agreement?
Sorry, I'm going to play that back to you. So you've got an organisation A. So they offer a contracting offer out.
Yeah.
Okay. So it's like a recruitment agency, or it's
in-house.
I'm with you. And so the question is, could the engaging employer, so the one who's not the immediate employer, could they offer accommodation as a service?
No. So when we have the guests in, say, staying at the organisation, then they become an employee through us. We contract them out. Can they then at that point sign a service tenancy agreement? Because that's technically what it is, even though they're not working, they're working through the recruitment service for another business. But the contracts are with us. Like a labour hire. Similar.
I might have a chat with you afterwards just to map that out more clearly. The version of the labour hire employer, so A, who is engaging the employees here is the employer. If they are commercially contracting those resources out like I'm trying to think of an example, like an IT contractor. You go and you provide IT support. Your employer is this original relationship, even though you're doing work on the location of this other employer. So for employment purposes, and I won't go into detail, there's a triangular employment relationship, which means things like personal grievances can be taken against this engaging employer. I don't think you wouldn't have a service tenancy between those relationships because they're not the employer, the original engager of the original employer is. Does that make sense?
The original employer could have the service tenancy.
Yes, they could. Yeah. As long as it's their permanent place of address. Yeah.
When you talked about giving staff members notice to move out of the accommodation, what happens if businesses are purposefully trying to use that accommodation just to help new people who've arrived basically get on their feet? So we, for example, have got a property where we are using it for people who've just arrived, and we've kind of said to them, ideally you'll be staying here for between 1 to 3 months, but during that time we want you to try and find permanent accommodation if you can. Can we have an agreement in writing to say that tenancy is going to be up to 3 months, because we then might have a trail of new people who are arriving who also need to move in?
My understanding is no, because the purpose, I think there would be a way to work it. I don't know that a service tenancy would be the right way to do it. And I think the reason you would argue that is to say it's not their permanent place of work, their place of residence, right? So they're here for 1 to 3 months. The purpose of this accommodation is to get them up on their feet, but it's not where they're going to be living permanently. So like if you were, I don't know, using my world as an example, if I was to fly to a client's site remotely and work and live there for 6 weeks delivering a project, that's not a service tenancy, although I'm there full time for 6 weeks, because it's just accommodation while I'm doing some work. So I think the answer would be no, but I might check that and come back to you.
Cool. Thanks.
Yeah, no problem.
I have a question. Is there a limit to how much rent you can deduct from pay? Are there any guidelines around that?
Yeah, there are. If you've agreed it with the employee, you can deduct quite a whack of deduction of rent from their earnings. I've got something tickling my brain that says something like a limit of 50 or 60% would be a cap on there, but I need to check what those specifics are and come back to you. Yeah.
Any more questions? I have one more. So if your employee's taking up a service tenancy, they still need to lodge a bond? How does that work? Okay, so
Yeah.
still, right.
Same process, yeah. So if you have an employee who's agreeing and entering into a service tenancy, bond gets lodged. It's the same process as any other tenancy relationship.
Thank you.
No problem.
Any more questions for Sylvie? This is an opportunity for free advice. Oh, we've got some online. Can you ask for rent in advance, or does that then become a bond? And can you still ask for a bond when you are deducting rent from wages? Yeah, and you've answered this last part, but can you ask for rent in advance?
Can you ask for rent in advance? You could do, because your employee hasn't earned anything. It would depend on the timing of when their employment starts and their pay period is and when the service tenancy begins. You could have them pay rent in advance, not from wages, right? There's no law that says that it has to only be from wages or only be from not wages. And if you had an employee who only wanted to pay you out of their wages, you could loan them that and loan them the money in advance to then pay you back as rent in advance. The timing of it would be a bit weird though. So I think the short answer is yes, but the circumstances would mean you might have to look at other options for managing that. Yeah.
Thank you. Any more questions? You've got one? Okay.
So because my HR is here and in Australia, I was wondering, are there any other places, either here or Australia, that you've sort of seen this happen where lots of employers are now housing their workers?
Yeah.
And are there any lessons we can learn?
Difficulty, yeah. Queenstown in New Zealand is the place where we see most of the service tenancy work come in. We have just over 1,300 clients across NZ and Australia, and in about 2 weeks we're going to hit 30,000 employees under management, so we've got a pretty broad database. Queenstown in New Zealand is the one where employers most often are providing accommodation. The second is anything that's rural, so a lot of agricultural clients will have kind of accommodation on site for farm workers and shearers and that kind of thing, so agriculture. In Australia we're not seeing it as much, but that might be a reflection of the fact that we're slightly littler in Australia than we are in New Zealand because our headquarters are here. But in New Zealand, it's definitely Queenstown and anything remote. Yeah.
I just wanted to reiterate about the sort of bridging accommodation thing, and I think that's probably where a lot of employers are looking to help. So I'd just like to reiterate that I think that's a really interesting issue to follow through.
And especially when you have people landing in a city that they haven't lived in or coming from overseas, kind of that foot in the door is helpful and meaningful, right? What I might do, are these slides going on after the session? What I might do is have a look into that and provide a bit more advice on that point, and then that'll be in the material that goes out. And there's been a few other questions I wanted to come back on too, so we'll provide a bit more info. Yeah. Just one at the back.
So just carrying on for that landing kind of area for employees to arrive when they get to Queenstown. So is there a way we can do it where we have kind of more than one bed in a room? So it's almost like a hostel situation. So people are kind of renting a bed instead of a room just for that initial arriving into Queenstown stage.
I'm not aware of any reason you couldn't.
Okay. As long as everyone was aware that was exactly what was happening, you outlined it quite clearly. And, okay.
And it would be being really clear on what to expect, being clear that everyone felt safe, because you still have your kind of safety obligations. My brain immediately jumps to the worst case scenario, so I'm not intending to frighten anyone or put you off that arrangement. What you need to be careful of is that if anything did go badly and they were the people sharing a room or the dorm or the accommodation were all employees, if there's a kick-off, someone uses someone else's toothbrush, like whatever it is that happens, that will affect their employment relationship piece, and you will have to respond to that. You can't just go, you had a tiff with your flatmates, like, too bad, so sad, that's your life, like, sort it out. Where there's also an employment relationship there, you would need to get involved in some way. But as a question of whether you could, I'm not aware of anything that would prevent you from doing that if everyone was aware and safe and above board. Yeah.
One more question, Sylvie. In terms of the workload for the employer, HR, and this is obviously quite a hefty amount of work and it's a lot of information to make sure you're across. Is it, if you're a bigger, possibly employer, is it better to get, say, someone like House Smart, who is speaking on the 5th of May, or a property manager in to create that balance or that distance between you, the HR,
It depends a lot on your resources, really. Yeah. So if you are a larger employer and you can engage a property manager, like any professional service provider, so your accountant, your HR person, your facilities manager, those relationships can be quite helpful, and especially when you are, again, trying to manage two separate relationships with your employees, that can be super helpful. I think if there is, particularly if you have dozens of service tenancies you're trying to stay on top of, in any circumstance I would recommend having a look at least at what the professional support is available to help manage those relationships. It's certainly not critical, but absolutely, if that's helpful to you and if you don't have the property or tenancies knowledge to manage that, like most of us don't, then I think that would be a sensible choice.
We have a lot of small businesses in Queenstown, and so I'm wondering whether in the circumstances where there's two employers that might take on a head lease or purchase accommodation, does that have any impact when the one employer doesn't outright own the accommodation, or and this might be an accounting question.
This is more of an accounting question, my instinct would be that in order to be a service tenancy, it's accommodation supplied by the employer, whether that's your limited liability company, whether it's your partnership, whether it's your trust. And so if the entity with which the tenant has the relationship is not the same entity as who employs them, I don't think it would technically be a service tenancy, but I'd want to run that past an accountant or a lawyer to check, but that would be my thinking. Jason, do you have any points on that?
So the question is what, whether the service tenancy would apply or not if there's two owners to the lease.
Yeah, I guess, well, there's the service tenancy side and there's probably also the interest deductibility side as well. But if all they're doing is leasing the property from someone else, then they're just paying rent and they claim that as an expense. So from that point of view, they just claim their half as an expense and then hand it on to the employees. What if it's a 50% ownership model between two businesses for the house? For the house, then the interest deductibility would fall away. If it's not the same, if it's not 100% the same owners as the employer as the renting place, then they wouldn't work. Right.
Wow.
Okay,
you could. No, I suppose you could. You could set up two companies and they could be in partnership owning the house, I suppose, and each company could own half of the share, half of the house through that.
I think we're seeing that. Did you have a question?
Yeah, just following on from the renting a bed, what are the obligations on that?
I'd need to send you to a property lawyer, not an HR/ER person. From an employment perspective, you'd want to make sure that it was safe and clean and there weren't any hazards there. It's not a workplace, but it's a place in connection with work, so you'd want to check that out. In terms of your legal obligations, it's not my area of expertise, sorry, so I'd need to send you somewhere else. Yeah. Good, important question, but I'd be remiss in answering.
The rules change if you're charging or if you're giving free accommodation?
No.
Another question, sorry. What about if you sell the property? What's your obligations then to be able to give notice?
Yeah, that was a question that came up at the back. I'm not sure on that one, so I'll need to come back and put that.
Standard residential tenancy is 90 days notice if you're selling it. There's you can enter residential tenancy now. One is if you're selling the property or you've got major renovations happening. The other is if it's a fixed term, you can cancel it with certain notice periods. But if it's a periodic, ongoing tenancy, then you can't cancel. That's my understanding. How smart will be able to answer that next week.
I think we should both stay up here because this is boosting my confidence no end.
Yes, hi, I'm Sylvie from Wellbeing Communities. I have a question from the perspective of the staff that I work a lot with different migrant communities here, not on the property, not on the housing, and not on work. Don't get me wrong, but I do see that a lot of them might be worried to ask their employer, who's also their landlord, about repairing stuff in the house, and they would probably prefer to be quiet and not to ask. But then you hear it within the vines that the accommodation needs a lot of repair. What is the position on that? What would you recommend?
That's a really tough one because there is an inevitable power imbalance. The language is not your first language. Maybe you create the channels for requests to come to us, right? So when we're saying to people with whom we have a service tenancy, it might be with your employer hat on. Every now and again you might check in and go, hey, I just wanted to check, is everything okay with the is everything okay with the house? Like, I haven't heard from you in a couple of months. Is everything all right? Is there anything I should be aware of? Because if we need to spin it in a way that's beneficial to the landlord, you don't want stuff to be gone wrong and them not telling you, because I can imagine how that would help it feel less like you were having to be the squeaky wheel in that relationship and speak up. So potentially a property manager or an intermediary. Secondly, for employers to own that conversation a bit more and to be inquiring. And the third would be to do what you can to show that you are a good employer and a good landlord. Like, respond promptly to requests. Don't retaliate or punish people or like microaggress them. Like, don't roll your eyes or just go, yeah, I can come take a look at that in 2 weeks. Like, that's going to make it feel really uncomfortable for any of us, let alone, someone who hasn't grown up here, to ask for help. So maybe all of that lives within the control of the employer though. So I don't know if that would be super tactical for the folk that you're working with, but those would be my thoughts. Yeah.
I think it kind of depends also on what's actually wrong with the property too, because I mean the healthy home standards have come in. They need to be met. That's a minimum standard, which means that you're supposed to have ventilation, mechanical ventilation on bathrooms, extractor fans over ovens, all that sort of stuff.
There's a fear also of having the rent increased.
Yep.
So if I talk, then the rent will increase. They fear that.
Well, the new residential rules are that you can only
Separate relationships, because contrary to some of how life might go, those are two separate people who have separate rights and entitlements to be there. So if you ended up having the relationship with the service tenant end, and then the other tenant wanted to stay on, I don't know that would inherently be problematic. I don't know that I'd want to live away from my partner, so I think they would both go. The other option I think would be to have the service tenancy with the employee who is your head tenant, and then they can kind of sublet other rooms to their partner or whatever.
But it's just getting rid of the partner when you need it for your employees.
Yeah.
And they don't want to, the new employee doesn't want to share a room with a perfect stranger that's, arrested for domestic violence.
So hypothetical, so general.
The partner who's not an employee, and that was a fixed term or a periodic, then you'd be strong. They can sort out the arrangement between themselves, and if the employment ends, then both of them are expected to leave.
Yeah.
And I guess it's no different to normal tenancy rules around evictions, and around saying to people, look, here's a notice, we'd like you to leave.
Yeah.
Yes,
Yeah.
it is.
And I guess the leverage that a service tenancy gives you is that connection to employment. And so if you, as we were talking about, if the service tenancy relationship ended because their employment ended and they were the head tenant with this, you could kind of move the package of people on, I guess.
So if you keep the employee, wants to stay, but wants to get rid of the partner out of the house, and the partner says, I'm not going, I'm just throwing them all out at you, because these things do happen, these scenarios do happen.
No, totally. I think in the relationship where you had
Luck, and then we'll need to wrap it up.
Thank you. How does the treatment, or does it change if the employee is a casual?
It doesn't. The difficulty would be in kind of claiming rent from their wages regularly, because a casual employee has no scheduled work, they have no kind of regular work commitments, and so if you had an employee who was a service tenant and you were claiming a service tenancy and you were claiming rent from their wages, I would feel really uncomfortable about that, because they don't have ongoing income from you, because it's not an ongoing relationship. So you could have a service tenancy with a casual, I guess is my point.
Yeah,
But
the only thing with that is that they don't have an end date on their contract, so how could you...
So casual employment agreements don't need to have an end date. They can kind of be an ongoing relationship, but not an ongoing engagement. So you could have a service tenancy, but you having a service tenancy wouldn't mean you regularly had to give them work. So it is possible, I think, is my response. Yeah. Maybe we can chat afterwards. It sounds like I haven't quite answered your concern. Yeah.
Okay, I think we're going to wrap it up here. Really good questions, though. Thank you so much, Sylvie and Jason. Really good presentations. There's just so many questions and loopholes and things that people need to be aware of. So appreciate you coming along. For people online and in here today, we have the final of our housing series on 5th of May, which I don't know what day it is, but again, it's the same place, yeah? And we're going to have the Housing Trust and House Smart talk about property management, which actually, by the sounds of it today, is pretty important. So thank you. Have a great day. Just a bit of information as well. Today we have the Minister for Housing, who we did invite to come along to speak at this series. So she's actually going to come along and speak to some chamber members today. So we'll have lots of questions for her. So we'll keep you updated on how that goes. Thank you. Bye.